Good afternoon, everyone. It's 9 minutes past 2 on Tuesday, the 4th of August. I'm looking at VectorVest UK, and I'm looking at a platinum mine that I know very well, SLP L. We've had a lot of interest in SLP over the last few weeks on VectorVest, so I'd just like to point out a opportunity for aggressive traders. So on VectorVest, the share closed yesterday, that'd be Monday the 3rd, at 48.6 pence. VectorVest values the share at 92, so it's significantly undervalued. Down a bit on the day. Our relative value measure is fair to excellent, or good to excellent should I say, at 1.28. Now this means that we believe the share will outperform what a corporate bond will pay by 28% over a window of 3 years into the future. Now it is a mining company, and the platinum price has been in a bear market for the last many years now. Relative safety is at 0.99 on a scale between 0 and 2, so it's a long way off what we would refer to at VectorVest as a worry-free share. Worry-free shares invariably have relative safeties above 1.25. The RT, which measures the short-term trend, is good at 1.17, and when we put those three things together, VST is at 1.15, Dr. Toledo's master indicator of the VST. On a buy recommendation with a stop loss at 44 pence. And very importantly, this GRT is annualized projected growth rate, and we believe that this share will grow its earnings at 37% next year. It pays a small dividend and has a history of growing that dividend reasonably safely and also increasing the dividend, and it's got a market cap of about £130 million. So we're dealing with a small miner here, folks, but the chart, the fundamentals are good, and the chart very interesting indeed. So that's the chart over my standard layout. Now I'll put up, there's earnings per share. And this is my standard layout, folks. Maybe make the earnings per share a little thicker so you can see it. Earnings per share in a window below the price on a candle plot, and the green line above the price is the VectorVest valuation, which is sitting at 92 pence and rising at the minute. Now, to get a good idea of the price picture, I like to start with a 5-year chart, and this is a 5-year. It defaults to a weekly chart. Down below we've got earnings per share, and this company has gone from losing money in 2017 to making 8 pence a share, okay, and moving up linearly over the last 3 years. There's the valuation. I've taken the liberty of putting in a long-term trend line, and that trend line has got 1, 2, 3 touches plus this last touch, and the market fell to that support level in the COVID crisis in February and in March. It was picked up by some very brave and smart people exactly at support. I'm always asked, I ask people at seminars, why did the market stop there? And quite simply, the market stopped where my cursor is, because that's where the orders were. The smartest money had anticipated the market falling back to support, and their orders were big enough to keep the market moving. So this all looks quite good. It's just broken out of this little triangle, and if I actually blow this all up now into a 6-month chart, we can have a look at the triangle, maybe a bit more. There's earnings per share, which is good. I'm going to get rid of that. That's our valuation, and we can see that it's made a rising bottom, made a falling top in this triangle, and seems to have broken out of this and come back and kissed it, and then charted a very strong day indeed. So back to 6 months and add volume, and share strongly accumulated. When you see a market rising on markedly rising volume, that's a good sign that we're in a bull market. This is the sell-off in COVID, and this worried me a little bit. It went up here in rising volume, went up here in rising volume. That's a sure sign of accumulation, folks. This sell-off that we had in June, there was rising volume here, and that worried me a little bit, but that seems to have gone away. And as it broke Again, a 3-month chart now. As it broke this trend line, it came back and kissed. That's always a good sign, because the smartest money would rather die than chase, and their orders were at the trend line, and as you can see, it was hit on that trend line in a really big day. On that particular day, we charted an outside bar, an outside day, and that means that the high and the low encompassed the highs and the lows of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days. So an awful lot of people anybody who had their stops under these lows got taken out. It's now charting an inside day, a multiple inside day. And although there's no formal name for an outside day and an inside day, I've noted over the years that a breakout of this pattern invariably produces quite a strong move. It still hasn't broken out. A few minutes before I in fact recorded this, it's sitting at 49 pence at about 2 o'clock this afternoon, but through that level I would expect this market to move quite strongly indeed. Just remember, folks, that the relative safety is low, so it is a opportunity for aggressive traders, those people with a great deal of experience in managing risk. And the one thing that I can assure you, that in a mining company, a moment of weakness will be severely punished. Let's see where it could go to. So let's go to the yearly chart again. Let's take the volume off, and to work out where a market will go to, folks, we use a Fibonacci extension. And if I go click on the high and go down to the low, the first target here would be 78% of that level, and as you can see, we're on 61% of it now. Through this level, then I think we'll get to 60 pence very quickly indeed. So we could move from 50 to 60 very quickly. The next target, if it gets through 60, would be slightly under 70. The next target would be 80, and then the final target would be at the VectorVest valuation, which coincides with a 1.618 extension of the pullback. So if everything goes well, folks, this can be a trade with a great deal, a really good risk to reward ratio, a trade where we can buy in at 50 with a stop loss probably 42, 43. That's 8 pence of risk. That could easily bring us in 30 to 40 pence of reward. I reiterate that this is a mining share. The relative safety, the safety and the predictability of the earnings is less than 1 on VectorVest. It's a share where risk, first of all, position sizing. You need to make sure that you don't risk any more than 1% of your capital on the trade. And just remember that that risk is the difference in pounds between your entry point and where you get stopped out. So if the market were to fall from, let's say, over 50 to 40, that should represent 1% of your capital. Then you need to have the experience and the strength and the emotional detachment to actually accept the risk and get out if it clips its stop loss. And many people, of course, put stop losses into place, but they can't take them. They haven't accepted the risk. I like this outside day. Now inside days, the fundamentals look very good for platinum, I feel, and for precious metals across the board. Let's see how this one goes. I hope you found this useful. Thanks very much indeed.